I'm Ron Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. How far would you open your Wonder Wallet to relive the soundtrack of your youth? For Oasis fans, such as myself, the answer is clear. Over 1.4 billion USD worth of tickets, travel, and memories. A spend that even surpasses Taylor Swift's Eras Tour in the UK. It is estimated that each Gallagher brother is to make 165 million USD take home from the entire tour. Millions of fans will pack 41 stadiums across the globe. And that's not to say they'll extend the tour. Fans expect to spend $1,000 each, and most say they've already spent more than planned. I know I did, with a quarter wishing they'd splurged even bigger. Oasis Wembley fans broke records by purchasing a whopping 250,000 beers in one night. But beyond the Britpop nostalgia, there's a signal for the markets. This is the experience economy in action. Consumers are prioritizing live events over material goods. A sector Barclays pegs at 181 billion USD in the UK alone, with steady growth expected through 2027. For investors, the message is clear. Discretionary spending isn't fading, it's shifting. And companies tied to travel, hospitality, and live entertainment stand to benefit. NVIDIA, the chip and software developer powerhouse that makes up 8% of the S&P, just dropped their Q2 results, and the numbers are huge. $47 billion in revenue, up 56% year over year. And they're guiding for even higher next quarter, $54 billion for Q3, which would set a new record if it comes through. But the spotlight is on China and the H20 chips. No H20 sales were exported in China in Q2. And revenue from China fell sharply. Some inventory did move outside China, and a deal requiring a 15% revenue remittance to the US government is still waiting on regulatory clarity. Even so, analysts are bullish on NVIDIA's long-term AI leadership. The potential $50 billion China opportunity, future H20 sales, and ongoing AI spending by tech giants support that confidence. Still, investors are cautious. Rising expectations, macro concerns, and China trade restrictions are cooling enthusiasm post-earnings. Some warn valuations may already reflect peak dot-com era style excitement. The big question now, though, can AI momentum sustain NVIDIA's growth? And will China's sales push the company into the next stage? Back in July, we highlighted Canada's rise in the LNG market, with LNG Canada launching its first shipment and the country on track to capture nearly 20% of global LNG capacity under construction. Now, the federal government has signed a major policy shift. Doors are officially open to new LNG exports. The energy sector in Alberta is buzzing. Officials emphasize that projects with strong economics and support from provinces and Indigenous communities will be considered. Pacific Coast projects and potential expansions, including a $10 billion LNG development, are moving closer to investment decisions. While East Coast exports remain uncertain, and federal policy reforms may be needed to expand production, global buyers are paying attention. Demand from Europe sees Canadian LNG as a strategic lower emission transition fuel. And investors are watching closely, as these developments could reshape Canada's role in the global energy market. For a full breakdown of what LNG is, why it matters for Canada, and how it fits into the global energy market, check out our LNG segment from July. From AI chips and LNG exports to record-breaking entertainment spending, the market's always moving. Don't look back in anger when you miss out on an investment opportunity. Follow Investor Breakout and maybe you'll stay ahead of the story. Morning glory.